Hello, everybody, and welcome to the Speaking of Insurance podcast. My name is Aaron Bollinger.
I'm Brian Bollinger.
Today, we're going to be talking again about auto insurance. This time, we're going to be specifically focusing on the commercial auto insurance, especially in California. And I mean, recently, we've seen this section of insurance get hit with a very, very big rate increase. So, why do you think commercial auto insurance is getting more expensive, Brian?
In general, it's the claims. Claims drive insurance rates. If you have no claims, your rates are better. But industry-wide in California, the number of claims have pretty much, it looks like, remained fairly flat. However, what they are seeing is that the severity of the claims, the amount of money paid out, has gone up substantially in the last decade. And when that happens, it means that the rates have to go up to basically cover that gap. So we're essentially just seeing natural pressure based on increased litigation costs, and that's putting pressure on the pricing.
So, I mean, you mentioned it, right? The claim severity, but also the lawsuits and things like that that are associated with that and the expenses that a lot of the people have to go through, to hire those lawyers and then having the insurance pay for that, that can also increase and drive up some of the commercial auto rates, right?
Yeah, well, it's all everything all in, right? So an insurance company, when they have a claim, the challenge they have is how do they get out of it cost effectively, right? They've already collected the premium for that policy, so they have the money in reserves. Now they're basically faced with a decision. Do you settle if the person wants $100,000 and they don't have, very minimal injuries? Is that, acceptable or not? In a lot of cases, they're saying, no, it's not. So they're pushing back and they're adding, more expense on their side of the table for, increased litigation costs. So now they might have a $5,000 or $10,000 attorney fee. Maybe that actual claim only settles for $10,000 or $20,000, but you now have the situation where you're out $20,000 to say $40,000 for this hypothetical claim. Historically, that sort of claim wouldn't have gone to arbitration or wouldn't have gone to, actually having attorneys and all these things. Maybe it would have settled for $5,000 to $10,000. And so, as that increased utilization, that increased cost to do these things is essentially created by the system, that gets passed on to the consumer. In this case, it's the businesses.
Not to get in the morality of it, but I know that there are some people who have played up injuries and things like that obviously they're able to get more money out of claims. Why do you think as a society we've digressed so much to, make these insurance companies basically pay for our little neck injuries that might not actually be neck injuries?
Well, again, I'm not quite that much of a cynic myself. I believe that most people that say they're injured are injured. However, I do know that there is a bit of pressure. People do feel entitled. I think also when they've had a bad experience in the past, maybe the insurance company ripped them off, or they had a car stolen or it got damaged, and they, didn't get what they felt they were compensated for. People feel, honestly, I'd say, a little bit of moral, I don't know, justification perhaps might be the word, to be a little more aggressive against insurance companies than they would be historically or would be against an individual person. That said, if you are a person with any kind of means or a business that has economic value, you do need to make sure you have proper insurances. And auto insurance, a lot of times on the commercial side, it's $1 million combined single limits. So anytime a plaintiff or somebody's injured in an automobile accident involving a work truck or a work vehicle or something that says, Joe's Inc. on the side of it, they're more likely to get an attorney because I think there's a realization that this could be a bigger payday. Also, I'd say social media plays a role in this too, where they find out that, Joey got 50 grand, for a broken leg or 100 grand for a broken leg in a car accident. People feel like, hey, maybe I'm entitled to something too. And that didn't seem to be quite the case, I'd say 20 or 30 years ago.
Obviously, the most important thing is that you're actually covered, right? I mean, like all those things that happen after, those are separate. And obviously, we wish that it wasn't as bad as it was. Otherwise, the prices would be lower. But I mean, making sure that you're covered is the first step. Why do some personal auto policies fail for business use and things like that to make sure that the business owners know whether or not they're covered?
At a high level, if you have a business, you probably have a commercial liability exposure. And that's usually best covered by a commercial automobile policy. Now, there are some unique situations where people might be like an outside salesperson, might be working as an engineer, and they just occasionally go to meetings somewhere, and they might be able to just talk to their personal auto policy provider, be that Mercury Insurance or Travelers or State Farm or Farmers, and they might be able to say, hey, I'm an engineer and I need to go to, one or two meetings a week in my car. Can I add business use onto or work use onto my personal auto policy? And I'd say about 95% of the time, the answer is yes. Now, if you're towing stuff or you got a big commercial vehicle, like a big truck or something like that, it may not be that may not be the answer you receive. You might receive an answer of no. It also, though, goes into things like, how is the vehicle registered? Is it registered in the name of your business? Well, if it's registered in the name of your business, that's probably not you per se, and therefore it might need to be on that commercial auto policy. And obviously, from my perspective, probably a 90+% probability that it needs to be on a commercial auto policy if you're trying to run it through a business and if you are especially doing things on a regular basis involving bigger vehicles.
What about if you're borrowing a vehicle, like a friend's vehicle? Would there potentially be a commercial auto coverage gap if you were to just have a commercial auto policy?
Oh, absolutely. Well, there's two parts of that, right? So one scenario is you're a business owner and you're borrowing somebody's car, or you rent a car, and that's what we called non-owned auto. You now have a vehicle you're using for work use. If that were only a personal auto policy, it could be a little bit of a question mark. However, again, that business use might help. The way we like to prefer to see it, I'd say the industry, the most logical way for it to be, is for it to be on a commercial auto policy. And when you have that non-owned coverage on there, whether that be through the symbol 1, that means any auto, or through a 789 approach to covering owned autos, non-owned autos, and then hired autos, you can do that. It's, again, important, though, that you talk about these coverages, that you look at your policy, understand, what's covered, what's not. One other interesting question that comes up is if you do borrow a vehicle for work use and it could damage it, let's say you cause $10,000, $20,000 of physical damage to that vehicle, is that vehicle going to be repaired by your insurance company? Or who's going to be responsible for repairing that vehicle? And there are ways to get coverage added onto your auto liability policy to give you some level of physical damage, even for non-owned vehicles. So it's an interesting kind of thought process, and you need to go down that path to understand what the pros and cons are.
There are a lot of nuances when it comes to coverage and what's covered and what's not covered. You'd mentioned, the instance where you were to get into an accident. What if an employee were to get into an accident on, using their personal vehicle for work? What risk is there in that?
Yeah, employees that call that non-owned use. It's not hired, you're not renting the car, but it's a non-owned vehicle. But the employees are, basically covered ideally under your commercial auto policy. Again, the symbol 1, 789 approach. And assuming that's the case, then you should be relatively okay. There is a challenge there, though. There are some issues. As you complete your underwriting application, they do ask questions like, how often do employees actually use that vehicle for personal, their personal vehicle for business use? If it's incidental, like, once a month, once a quarter or something like that, not a big deal. Once a week starts to get a little more gray. In some cases, you might have people that are utilizing their own personal vehicles for, say, doing pizza delivery or something like that, or even Uber, for example. Uber has to have their own policy for that. The pizza delivery place needs to have their own policy for that. That's not going to be covered under your personal auto policy because it's not part of your personal exposure. So it's about designing a program that meets the needs of the actual business and approaching the business with, where they're currently at, not assuming that we know all the exposures, to begin with.
Obviously, we can't make any assumptions, but with your particular insurance, with your insureds, are there any specific or commonly made mistakes that you see contractors making with commercial auto insurance, whether that be understanding or coverages?
I'd say historically contractors have been very generous to some of their better employees by giving them work vehicles to use off hours. We do have some clients that have had issues with that in the past. We did have one that was utilizing a vehicle that was registered in the name of the business, and the person ended up nearly killing somebody, and it was a $2.5 million claim or $3 million claim, something like that. So we have experienced claims that if that would have been on the other party, the employee had been using their own personal vehicle during non-work hours, that wouldn't have resulted in any liability to the actual business, if you will. And that is a much stronger position to find yourself in. So, we're trying to educate you here. We're trying to give you ideas. One of the things I prefer people not to do is to provide direct vehicles to employees, especially for off-hour use. That said, some people do give people a small stipend for using their personal vehicle, or they get pay mileage. Those kinds of approaches can be okay.
That's an excellent idea. I mean, I don't think, obviously, increasing your business's auto exposure is ever, a positive thing unless, it's worth it and you have a good relationship with the driver. But even then, I mean, keep your business, your business. And so I just wanted to summarize this with one final question. So how are we supposed to know as insureds whether or not our commercial auto coverage is properly set up? I know it depends on who we are, but just like in general, are there any features of the policy or the coverages that we should be considering for us in particular?
Yeah, one area right now, it's a really hot topic in the insurance industry in California, is driver selection and driver criteria. A lot of times in the past, they would kind of let drivers with a couple points on the record, get passes and be on your commercial auto policy. With the increasing of rates and the severity that we've seen in some of these claims and just the overall stress that a lot of business owners are experiencing, really looking at your driving list of people that are authorized to drive, maintaining that list, occasionally maybe once a year or even once a quarter, once every 6 months, reviewing it. In some cases, if people have larger businesses, they might do the pull program through the DMV, allowing them to get instant records of when people get tickets or accidents or things like that pop up throughout the year. But at a minimum, 1 year check-in, you need to make sure that you inform your commercial auto insurance company of your driver's list. Drivers that are not on the policy has become a very interesting question, and in some cases companies are trying to, I wouldn't say weasel out of insurance claims, but they are certainly asking a lot more questions. If a bad driver suddenly is driving your vehicle on a regular basis and you didn't inform them, there is a potential for that claim to be declined.
Bunch of coverage gap issues, especially in commercial auto insurance. I mean, obviously you said you're not trying to wiggle out of the claims, the insurance companies, but I mean, oftentimes, if there is something in the policy that says it is excluded, then 99% of the time it's excluded and there's not going to be coverage in that instance. And so I know that there's a thing called a personal umbrella policy and commercial excess policies. We have a lot of questions about that on our social media platforms, like a lot of attention towards those two different types of coverages. For that commercial excess, how do we know if that's properly being put over our commercial auto coverage?
Well, that's the weird thing, I'd say. A lot of people used to think that it would just cover anything that bad that happens. And a lot of times now the excess is actually what they call following form. That's the standard word we use. So that means if your primary policy didn't list that vehicle or didn't provide coverage for that particular driver, or that driver was, God forbid, excluded from the policy and they got into an accident on the work behalf, there is a possibility that the excess liability policy would, again, try to essentially decline to, indemnify or defend, the business owner in that situation. And so it's not like you're possibly directly committing fraud. Yeah, that would be an actual, act of choice by the person. But even just omitting to inform people that, that guy's driving my vehicles now, can really cause some serious coverage issues, not only on the primary policy, but on the excess liability policy, which is, again, the last thing you want. I mean, you buy the insurance policies to know you're protected, to know that you have the coverage. And if you have $5 or $10 million of excess liability coverage, that's a lot of money. I mean, you could have like $6 to $11 million of coverage for a big accident. And that is not something you want to mess around with by worrying about driving lists or driving records. We've had some people in the past say, I want my best employee to, have this be on the policy. We run the MVR, the person has a DUI, a couple years prior. There are certain things that are just showstoppers, and as a business owner, you have to take responsibility for making sure that your drivers understand that driving on behalf of the business is not something they're just automatically going to get. It's not a right of employment, right? It's something you give them, but there's responsibilities included in that, not only to drive safely, but also to inform you if their driving records change so that you can make decisions based on what the status should be for them on an ongoing basis.
Well, that was very well put. Obviously, that's not just the exclusive job of the employee, right, and their driving status and their MVR report and ongoing changes with their driving record, but also there comes a point where the employer, right, it's equal shared responsibility, right, the driver and the person who's basically in charge of the driver with their business and their name on the line. Reporting things to companies is a very important thing. What about for insureds that go across state lines, right? Whether it be truckers or a different type of business, is there anything that they should keep in mind that's different from just that in-state coverage?
Well, that gets really complicated, right? Trucking insurance and going across state lines and USDOT regulations. There's inspection requirements for vehicles. There's driving, reporting requirements. There's a number of things based on the gross vehicle weight. For most of our clients, I'd say the smaller general contractors on down to the subs, Most of them probably don't experience a lot of that. We do have some clients, though, that do experience that. We kind of consider that more of a niche situation, not something that we would probably delve into or needs to be its own podcast. And it's actually something a lot of our clients end up hiring a third-party service to help them with all the filings, because sometimes there's a number of different things, especially if you're, hauling over a certain level of fuel or oils or, certain other, possibly toxic materials. It's a very nuanced, you got hazmat certificates. It can get very complicated very fast. So we do try to encourage people to minimize those kinds of exposures, whether it's local or nationwide. But also, one thing we didn't mention, and I think it's pretty important that people understand, the commercial auto policies are not written on an annual mileage basis, right? The commercial auto policy, the way they rate it now in California, it's based on radius of operation. So if you say, hey, I'm within 50 miles of my office, that's as far as I go for work, that could be true. Some companies have 100 minimum or 300 minimum, but 50 to 300 is usually where most people's business policies, come out at. And it is important to communicate that with your, agent or broker and or insurance company and make sure that you are being properly rated. Because in some cases, if they're rating you on a 1,000-mile radius, let's say, and you're only going 100-mile radius, you could be overpaying 5 to 10, maybe 15, 20% even. And so little things like this communication about, not just the drivers and driving records, your processes and controls, but even things like radius of operation can be a big factor in helping reduce your auto insurance costs.
And then another thing as well, I mean, you mentioned that was a really good point. I remember we had a specific instance where we were able to save an insured a lot of money because their radius wasn't as high as it was being reported initially from, what we had been given from their prior policy. And obviously that's a very big thing, and it's a very good way to save money, because if you're being honest about that radius, obviously don't lower that radius if it's pretty high, because there are events where, you're not going to be covered, right? I mean, the insurance company, if you're lying to them.
If you're going across state lines, or you occasionally go into other states and you're saying you have 50-mile radius and it's really, 500-mile radius, that's a problem. Again, you need to really be aware of what you're talking about and what your particular driving situation is. And also, it may change. You may pick up a job out of state for 6 months or a year, or maybe you are trying to expand to, doing just work in LA to doing work in Vegas and Phoenix. Maybe you do have to change up that. Or maybe you have more than one location, and maybe we have to split up that policy because you have a Phoenix office now and you have an LA office. And so you really have to get into the particulars of exactly what the client is doing and what they're planning on doing with their business. And sometimes it can be cost effective to make those kinds of changes.
And you had said that the policy it's obviously rated with that heavily in mind. But another thing that we had mentioned before was that driving, right? The driving record of the drivers who are listed on the policy. And so, making sure that list is as squeaky clean as it possibly can be, right? And optimizing that list with your broker and on your policy is another huge way to be able to save money. Again, we had, like you said, somebody who we were trying to quote their commercial auto with a separate company, and they had a very bad driving list, right? I mean, 4 or 5 people that were getting into accidents pretty consistently.
Well, you get 2. Yeah, usually what I see is if you have 10 drivers, you have 1 that's probably a potential problem. If you have 15 to 20 people, maybe it's 4 or 5. A lot of times it's odd though too. It's like certain people, the employers know who the bad drivers are. I mean, every client that I've ever talked to, that if you say, hey, they're like, oh no, that guy can't drive for us. And you're like, well, why? Because they know. They've already been down that path. So it's important to communicate to people. It's important to at least have a plan and a strategy. I think documenting it in writing is something I do recommend. Like, here's what our driving criteria is. Here's what this is something you get to do on behalf of the company. But again, it's a privilege. It's not a right. And, here's what you have to do for us, to make sure that you protect the company too. We have talked about, cameras in vehicles and telematics and things like that. And there are some benefits to that. I'd say mostly it's behavioral. If the employee knows you've got a camera looking at them inside the cab and outside the cab, I think they're a lot less likely to be, on their phone or doing something crazy. That said, I have some clients that have, 3 or 4 people in the van with them or in the truck, and they're driving to a job site, and even things like that. Now you got 3 or 4 employees that are in a commercial vehicle, and one thing to keep in mind is if they do get in an accident in a commercial vehicle, definitely on the clock, it's a workers' comp claim, but potentially even if it's off the clock, could be classified as a workers' comp claim because they're in a commercial vehicle. Essentially, that's your working environment. So the idea of giving people vehicles that they can take home on, their corporate vehicles, it's not something we highly recommend. Actually, we try to, discourage as much as possible. And then we used to have people in the past that wanted to be nice. They're like, they've got this big box van. It's a 20-foot box van. And, Joey's moving and he needs to have a van to move. Let's just let him use the work truck. We've got this nice lift gate, those kinds of things. And the potential liability there as a business owner is something that I can't overestimate. We've even had some people, unfortunately, that, with those lift gates, they're out in the field, they're doing something, somebody hasn't, experienced it in the past, and, the lift gate goes down on somebody's foot and crushes it. I've had situations in the past where we had a warehouse that we were operating, and we had people that actually, accidentally fall off of those lift gates. They were rolling a dolly out, and then they actually fell off. So these are the kinds of things that, we've seen claims like this. You want to be nice to your employees, you want to treat them well. In that situation, I do recommend giving them a couple $100 as kind of a moving, bonus helping hand, and say, hey, go run a U-Haul. You know what I mean? Because that's going to be where the better opportunities are.
I think that was the alarm for this podcast, but thank you so much for all the information. I mean, I know that I definitely learned about a lot, and I'm obviously not a commercial auto policy holder, but definitely very insightful, some of the information that you had given us. Thank you for that, Brian.
Oh, thank you. Anything else you want to talk about?
I think that next podcast we're going to be talking about general liability insurance, and so just keep an eye out for that. If you
and those two can work together. Honestly, one thing that we talked about hired non-owned auto on the liability. If you don't have a commercial auto policy, if you have that personal auto policy, a lot of times we can get for very little money hired non-owned auto coverage on your general liability policy, and that'll still help protect your business from employees using their cars, or if you have to rent a vehicle, small vehicle, not big trucks, but small vehicle, on behalf of work, having some liability coverage. So that'll dovetail right into this. So that's perfect.
Perfect. Well, we have a smooth transition for next podcast. Thank you so much for your time on this one.
Thank you too. Take care.
You too. Bye.
Bye.